First of all, what is the model policy on grievance redressal? See, it is based on various principles which we have studied in the previous chapters of, you can say, 16th, 17th, and 18th. But let's revisit them one by one. Customers will be treated fairly at all the times. That goes without saying. You cannot treat them unfairly. You must be very, very fair and considerate about the customer doubts or the resolution of those doubts. Complaints raised by the customers will be dealt with courtesy and in time. So the specific timelines are also important when it comes to customer doubts or the customer complaints. Customers will be informed of avenues to escalate their complaints, grievances within the organization and their rights to alternative remedy if not fully satisfied. See, the RBI scheme of ombudsman, it is based on this phenomena only, that if a customer is not satisfied with the resolution provided by the banks, then only they have this option of moving to the RBI. And when we talk about the efficiency, which has been increased thanks to this particular regulatory measure by the regulator, then yes, it has ultimately benefited the banking sector as whole. It has also given an avenue for the customers to instill the trust in the banking system. So bank will treat all the complaints efficiently and fairly. There should not be any kind of distraction while handling any kind of complaint. They must act impartially. Employees will work in good faith and without prejudice to the interests of the customer. What are the interests of the customer? See, the sole aim of customer complaint is to get their issues resolved. Fine. That is the only thing. Deep down inside a complaint, the resolution is what a customer wants, nothing else. If you are having some apprehensions that customer has given a complaint just to mock you, or for that matter just to give you an heads up that further action won't be taken, so this is a wrong practice. You must be very empathetic towards the customer. What all interests are there for the customers? When you talk about the internal machinery to handle the customer complaints or the grievances, see, the customer awareness and facilitation, that is the prime importance. Why I'm saying this? If the complaints are moving up in the order, the complaints are not resolved, and they keep on piling in a particular branch, then it will not only be detrimental to the branch's reputation but to the bank's reputation as whole. And while we are trying to accommodate all the complaints, all the grievances of a customer, along with that, parallelly, we must start the customer awareness also, which acts as one of the important component in the internal machinery to handle these complaints. So how you can create awareness? You can tell the customer where to make a complaint, how a complaint should be made, that is, when to expect a reply. If they know that for sure within 10 days the customer's complaint will be resolved, then they can wait. Otherwise, if you do not come up with a solution for, let's say, 90 days, then there will be a detrimental effect on your branch. But if they already know that yes, 10 days is the maximum time, and they will be very empathetic towards the bank staff also, the customers, they do not want any kind of chaos. They just want to be heard and to get their complaints resolved. Whom to approach for redressal? You must have a particular person, or for that matter, a particular counter for that. And these information, whether related to a particular official or a particular counter which you have made in your branch, must be readily available with the customers. What to do if the customer is not happy about the outcome? Then also, rather than giving a resolution that you can go to the RBI's ombudsman scheme, you must have an alternate. You must advise the customer to wait for some more time, because you and your team sincerely is looking into that matter. Along with that, you should have a complaints or the suggestion box for the customer's convenience, where they can suggest also. Sometimes what happens, what we have seen in the banks, that not only the complaints but certain suggestions are also unheard. Nobody wants to suggest anything. Why? Because of the culture. You should not promote this culture in your respective branches, and try to be very open towards suggestions also. Complaint book or register must be maintained in the branch, and complaint form should also be there. Although it is not advisable to have a complaint form, because once you are open to the suggestions, you are looking into the complaints with efficiency, then no matter what kind of complaint a customer comes with, you will be providing the resolution. Now, when we talk about the customer grievance redressal system, one of the most important, or the earliest, I would say, system was ODR, that is online dispute resolution system. When we talk about the specifics of this particular system, the Payment System Vision 2021 of the RBI highlights the need for technology driven, rule based, customer friendly, and transparent dispute redressal systems. See, whenever there is a particular doubt in the mind of customer, it is there only because of non-transparency or the opaque policies of a bank. If you are open to the customer with all the policies, all the guidelines which your banks are making right now, then the customer will also feel at home. He or she will also feel that yes, you are addressing or trying to address all the doubts, plus trying to guide them as well. In August 2020, RBI advised authorized PSOs, that is payment system operators, banks and non-banks also, and their participants known as PSPs, to put in a place system for online dispute resolution. A particular system where you will be resolving the doubts, the disputes, or the grievances of the customers via online mechanism, so that customers also feel the convenience while giving a particular input related to the disputes. If the grievance remains unsolved for up to 1 month, the customer may approach to RBI, that is Reserve Bank Integrated Ombudsman Scheme, RBI OS as we know it, 2021. Customers shall provide with one or more channel for lodging the disputes and grievances, be it the web-based or the paper-based complaint form. One complaint form must be there. Then you have the IVR, the telephonic registry directory must be maintained, and you must make the customers aware of this particular number. Mobile application, call center number must be there. SMS through branches also. You must provide a particular channel for lodging the complaints. Fine. Although we do not have that much resources right now in the public sector branches, but yes, that is how the system should work. For mobile phone based systems, third party app providers should also be encouraged, so that you can have the resolution as soon as possible. The aspect of data confidentiality shall be taken care of, because ultimately it lies in the duties of the banker. Confidentiality of the data must be maintained. Next, when we talk about the complaints of unauthorized electronic transactions, in the SMS and email alerts sent to the customers, facility to enable customers to instantly respond by reply should be provided for notifying any object. Any kind of object you are trying to notify must have the option of reply. And this will send a positive message to the customers that yes, the bank is there for us and they are also very serious to address our complaints. Complaints should be resolved and liability of the customer, if any, established within the timeline specified in the bank's board approved policy, but not exceeding 90 days from the date of receipt of the complaint. So various banks have different timelines for their doubt, or you can say grievance redressal, but it should not exceed 90 days. No bank should take more than 90 days. Otherwise, RBI's ombudsman scheme will open the gateway for the resolution, or you can say dispute redressal for the customers. If the complaint is not resolved within 90 days, the customer should compensate it as per the RBI norms. So compensation will trigger once you complete these 90 days and no resolution has been provided by your bank. Credit facility related complaints, the maximum complaints when we talk about the data, the official data of RBI only from 2025, you will find the maximum complaints of customers pertain to the credit domain. Whether there was a service charge which was levied wrongly, the interest payment not calculated correctly, or for that matter, misinformation being spread by the respective banks. All these are the reasons why credit domain has the maximum complaints according to RBI's data. The board of directors should also lay down the appropriate internal redressal mechanisms to resolve the disputes related to loans. When you talk about board of directors, yes, they should also be encouraging the bank's branches to follow some guidelines which in effect will transform the entire banking system. Okay, so if you have any kind of doubt, guys, I would highly recommend you to ask me in the comment section, and do let me know if you have any kind of suggestion that would be highly beneficial for us. So when we talk about the next particular disclosures related to complaints, we have a particular CP for this. So based on the recommendation of Committee on Procedures and Performance Audits on Public Services, which we know as CP Okay, always remember CP is there. A particular committee was established so that we can have the procedures laid down for the public services along with the performance audit. RBI had advised that banks must place a statement of complaints before the board's customer service committees along with an analysis of the complaints received. So all these things should be encouraged on the, you can say, bank's board policy also, plus the various customer service committees which we have, be it at the nodal level or for that matter at the state level or the local banks level. All the levels, whatever the customer service committee is there, it must follow the recommendation of CP. The full form of CP is also important. IABF can ask you this. Next, when we talk about the intensive review of grievance redressal mechanism, so when we talk about RBI, it takes the complaints very seriously. RBI also undertake the annual assessment of customer service and grievance redresses in the banks based on the data and information available via CMS, which is what complaint management system, and other sources and interactions. Then we have principal nodal officer who will be appointed by the banks under the ombudsman scheme. And what should be the rank of this particular individual? It should be not below the journal manager. Name and address of the principal nodal officer may be forwarded to the chief journal manager, customer education and protection department, RBI. So when we talk about the name, address of your principal nodal officer, it should be forwarded to the CGM. And for which department? The CGM should belong to which department? It is Customer Education and Protection Department, the CEPD, fine, of RBI. Okay. Contact details of the principal nodal officer needs to be prominently displayed in the portal of the bank also, so that the aggrieved customer can approach the bank with a sense of satisfaction that she's attended at a senior level. That is the rationale. Fine. RBI has given journal manager this power under the ombudsman scheme so that the customers also feel that yes, a person of the level of journal manager is handling my grievance. Then we have Chief Customer Service Officer at the select banks. So in May 2015, RBI advised few banks to appoint an internal ombudsman IO designated as the CCSO, that is Chief Customer Service Officer. Now, when we talk about the specifics of this CCSO, the person should not have worked in the bank in which he or she is appointed as CCSO to avoid what? Conflict of interest. Otherwise, they will be obliging the bank only. The bank's internal ombudsman is a forum available to bank customers for grievance redressal before they approach the ombudsman. In September 2018, RBI issued revised IO scheme, that is Internal Ombudsman Scheme 2018.
But before jumping to the 2019, I would like to highlight the older versions of Consumer Protection Act, which was 1986. When we talk about the Consumer Protection Act, why it was essential in the 80s, in the 90s era, why the countries, the various nations which are there, they were very specific about a particular law, a particular act which will provide some protection, some kind of protection to the customers or the consumers. Reason being this, the pre-globalization era. When we talk about the investments, once the investors come in your country, they will be focusing on the profit maximization. The consideration of the society or the social welfare is a limited one whenever we talk about a profitable business. So all those activities which are governed by business entities and they have consumers or for that matter customers as one of the stakeholders, a particular law was amended, a particular law was passed, and we know it as CPA 1986. Post-liberalization, the Indian market has grown with an unprecedented pace. We know the liberalization phase starting from 1991 till today also, we have n number of avenues for the business activities to flourish. But what about the consumers? This particular act, that is Consumer Protection Act, will look into that matter only. The earlier act was found inadequate to address appropriately to deal with the new issues. Hence, revised law has been enacted. Since this was a pre-globalization era act 1986, so after globalization there were n number of concerns which were advanced by the customers also, and somewhere down the line producers also felt that the demand is not rising, it is instead declining. What was the concern there? The major issue was the supply. The supply chain was not at all flourishing thanks to the limited production level. And for that, the producers also thought that we must protect the customers so that we can have some lucrative offers for them and they will be, using their products. So after the globalization era, we had discussion in the parliament also, and a particular law was enacted, bill was passed, and right now we see it as CPA 2019. So the 1986 Act was enacted with the objective for better protection of the interests of consumers or the customers. So one pertinent question which must be in your mind, whether this particular act applies to the customers of bank also, because you guys being banker must be curious about this thing. So let me clarify the most important aspects which are included in the CPA, that is Consumer Protection Act. They are directly or indirectly by various laws, be it the RBI Ombudsman Scheme, be it the board's policy, have been implemented in the banks already. So the Consumer Protection Act 2019 retained the preamble of 1986 Act. What is this preamble? What is the basic crux of preamble? Be it the preamble of our constitution, preamble of a particular act, or whatever bill has been enacted. Preamble talks about the essence. What is the major objective? What is the crux of a particular act or a law? So it retained, the 2019 CPA retained the preamble of 1986 Act and had the same purposes as stated above, but it revisited the entire framework in the context of radically changed ecosystem and contained new provisions and also expanded the concept of consumer protection. You want to protect the rights of customers, then you must be very serious while enacting a particular law, that is CPA 2019. CPA 2019 extends the whole of India, including UT of J&K as well. So when we talk about the coverage, this law has been implemented in J&K as well. Like the earlier 1986 Act, it applies to all the goods and services. So from here also you can see that services are included, excluding some of the services or the goods, like goods for resale. Nobody is answerable for reselling of a particular product. goods for commercial purposes, then services rendered free of charge. If you are not paying any kind of money, any kind of amount for a particular service to avail that service, then nobody will be able to protect you, because under the law, under CPA 2019, a particular service must be rendered and that service should have been a chargeable one. Something must be charged from that. Services under a contract for personal service. So personal services again not covered under the CPA 2019. Here nothing is mentioned about the banking. More or less the goods for commercial purposes also are not under the ambit of CPA 2019. Now salient new aspects included in the CPA 2019. These are the new aspects. And when we talk about the examination, whether the examiner will be interested in asking you all these new aspects, answer is no. Examiner will focus on the essence. CPA 2019, how it implies in the banking services. So nonetheless, let's see what all has been added. So it defines specifically the consumer rights. The 1986 Act, although a comprehensive one, but this thing, the consumer rights, was excluded there. Then it adds the feature of unfair contract. The unfair means of a particular business or a particular contract has been added. Introduce the product liability action. What kind of action you can take whenever we talk about the product. Defines the design and includes related aspects. The design, the construction, the build of a particular product can also be contested in the CPA 2019. It includes e-commerce, which is a very important aspect when we talk about our foreign trade policy also. India wants to maximize its services in e-commerce activities, but thanks to various stipulation by World Trade Organization, still we are not able to implement this. But the CPA 2019, it includes the e-commerce as well as the electronic service providers. So all those services which are being provided electronically by various service providers, they are also included. Advertisement and endorsement. See, this advertising is a very important step which has been included in CPA 2019. The misleading advertisements, you can contest them also. Adds the express warranty parameter. Whatever there is, whatever product there is, whether it falls under the ambit of warranty or guarantee, it must be specifically mentioned. Distinguishes between the manufacturer, product seller, and product service provider. So whatever goods you are using from any of the companies, just try to flip that product and you will see on the labeling at least the manufacturer, the product's manufacturer if it is different from the manufacturer, and the product seller. These three things will be specifically mentioned there. Why? Because CPA 2019 stipulates that. Plus, when we talk about the banking services, the CPA 2019 also covers the banking services. But when we talk about the extensive coverage of banking services, the consumers hold certain right under the RBI IOS, that is Integrated Ombudsman Scheme. When we talk about who is a consumer, see, in the customer banker relationship chapter, we have seen what is the definition of a customer or who can be a customer, but how a customer is different from the consumer. There must be certain consumables whenever we are talking about an entity, an individual who will be tagged as a customer or consumer. So it will thus be observed that the consumer is any person who, for a consideration paid or to be paid all these services, has bought any good or for other than resale or commercial purposes. So bought means they are buying something, they are investing in a particular product. So some money has been debited from a particular individual's account and credited to the person who is the owner or the seller of this goods. Hired or availed any service other than for commercial purposes, and that under a contract for personal services. Whenever we talk about the personal services, they are not included in CPA 2019. So always remember, excluding the personal services, all the remaining services will be included here. And the person or the individual or the business entity, whosoever is consuming or paying for that service, will be known as a consumer. Has used any goods other than for commercial purposes or benefited from any service other than from commercial purposes, and that under a contract for personal services. See, when we talk about the personal services, they are totally different from the commercial one. And this is a loophole, this one, commercial purposes. This is a loophole which is still prevalent in CPA 2019. If we talk about the CPA 2019, it will be applicable to all the goods and services except for certain exceptions which we have seen. When we talk about commercial purposes, a particular business entity can label the products they are delivering as non-commercial products or non-commercial goods or services, and it indirectly implies that CPA 2019 is not applicable to those products, to those goods or services. So let's see when the government comes up with amendment of CPA 2019. Till now, when we talk about 2025, so commercial purposes are excluded from the definition of consumer. Next, what about the consumer rights? Various rights are there, 5-6 rights which are important for the examination. Let's discuss them one by one. The right to be protected against the marketing of goods, products or services which are hazardous to life and property. So whenever you see an advertisement on television or for that matter any social media platform also, one warning is there. If the particular producer feels that yes, this particular product will be detrimental to the life or property of a particular person or the entity. The right to be informed about the quality, quantity, potency, purity, standard and price of the goods, product, services as the case may be, so as to protect the consumer against unfair trade practices. What are the unfair trade practices? All those activities where certain laws have been flouted by the producer, they are termed as unfair trade practices. For example, when we talk about the quality assurance of a particular product must be done. That is what the WTO mentions in its document of AOA. But if a particular firm is flouting that particular rule, they are doing what? They are doing the trade using unfair practices. That should be prohibited, and that is prohibited, and consumers' right hold in that scenario also. The right to be assured wherever possible access to variety of goods, products or services at competitive prices. So competitive prices means no injustice must be made towards the consumers whenever you are keeping a price or finalizing price for a particular product. And mostly in today's world it cannot be done also. Indirectly or directly you have to keep the prices in check. Whatever product you are delivering or services you are giving, you have to have a particular price in check. Reason being, there are n number of competitors in the market. The customer has those choices. But yes, it is also included in consumers' right. The right to be heard and to be assured that consumers' interests will receive due consideration at appropriate fora. What is this appropriate fora? That is also a point of discussion in this chapter only. But when you talk about this line, this particular statement, it states that the right to be heard. Whatever inhibitions a consumer has for a particular product, you must provide the appropriate information for the particular product. The right to seek redressal against unfair trade practices or restrictive trade practices or unscrupulous exploitation of consumers. So right to be heard, its extension is this one, right to seek redressal. Whatever grievance a consumer holds, it must be sorted out, it must be settled as soon as possible. The right to consumer awareness. So you must run some campaigns, some advertisements to raise the public awareness for various products, and it is a part of, or I would say integral part of, consumers' rights. Next, significant consumer complaints redressal for related terms. Various terms are there when we talk about the grievance redressal mechanism under the CPA 2019. First of all, let's see what is the term used for the administration. So first of all, we have district commission, which means district consumer disputes redressal commission, established under the subsection 1 of section 28. So always remember, wherever this term is written with respect to the CPA 2019 or the consumer rights, it directly means district consumer dispute redressal commission. That is the full name. And which subsection is responsible for this particular definition, or it is wholly defined in which section? Section 28 of CPA 2019. State commission, it will mean what? State Consumer Dispute Redressal Commission. And it has been established under which subsection? Section 42 of the CPA 2019, it mandates that this particular commission must be established in the state, and for the district as well we have section 28. For National Consumer Dispute Redressal Commission, section 53 stipulates such kind of establishment. Next, we have mediation. What do we mean by mediation? See, there are two things. One, a particular award has been given to the consumer by the redressal authority, by the appellate authority for that matter. Second is mediation. You want that the consumer and the producer should reach a common point so that we do not have any further argument. So mediation means the process by which a mediator mediates the consumer disputes. Mostly you will find the district commission having a particular official for mediation only, known as mediator. Mediator means, mediator referred to the person who will be mediating the entire process of dispute redressal, and it is stipulated under section 75. These sections are very important. Apart from these sections, nothing can be asked here, because apart from the sections, it is too direct. Next, we have member. It includes the president and the member of national commission or state commission or district commission, as the case may be. So when we talk about the president of a particular commission, or in general the members or the officials working under any kind of commission, be it district, state or national, they will be termed as member of that particular commission. Okay, for various foras, we have four verticals, or you can say four components which are important for us. First of all, consumer protection councils must be there at all the level, center, state as well as district. Next, Central Consumer Protection Authority. What is the basic aim or objective of establishing this particular authority? Authority to regulate the matters relating to violation of rights of customers. Whenever we talk about a regulator, like in the banks we have RBI as our regulator, there also what is the role of RBI? To regulate the entire activities which are going on in the banking sector. Similarly, you have CCPA for the you can say consumers' rights, for protecting their rights. Consumer Disputes Redressal Commission, just now we have seen, again there are three types. First one being the central level, state and district level, and the individuals or the officials of these respective councils will be termed as members of the respective commissions. Then we have consumer mediation cells. So mediation, although it can be done at central level, but the district commission also has certain cells for the mediation process. So when we talk about the consumer mediation cells, these are attached to each redressal commissions and regional benches. These cells try to get the dispute settled through mediation, that no harm should be processed towards the producers, and the resolution must be done at the consumer's end. So the dent in the image of a producer should not be there. That is the essence of mediation. Otherwise, it is not a process which is regularly followed. Fine. So when we talk about this chapter for this particular session, this was it from my side, and the entire chapter of CPA 2019, starting from preamble till the various components, they are very important. Everything is important in this chapter. In module A, there are very limited chapters which hold the importance as such whatever the topics are written, and unit number 20 is, that is CPA 2019, is one of them. So if you are studying on your own, I hope that this particular discussion, whatever we have done, has given you the initial push so that you can complete the chapter on your own also by reading either the Macmillan publication book or whatever notes you have with you. Credit proposal. Supposingly a customer walks in the branch and he or she wants to avail a loan for a specific loan product. Then there are 2 or 3 things which you must ensure, starting off with the loan documentation. Normally in the branches we see that the bankers, they have already printed a particular format where they have enlisted all those documents which are necessary for a respective loan product. But when I talk about the documentation, is it the only thing which you must focus upon? Answer is no. The reliability of the information which is being provided by the customer, although respected at the bank's level, but when we talk about the purpose of loan, that is also essential. The repayment schedule, what kind of repayment schedule should be there with respect to the individual who has asked for that particular loan. Whether the capacity to repay is right now there with the customer or not. He or she might possess a particular loan document, but whether that particular document should be the only proof or it should be the only ground upon which we should be disbursing the loan amount. All these things you should take care while appraising the loan, while evaluating the loan. Appraisal means what? Starting from the very basic till the actual objective of the task, you have to evaluate everything. Fine. So in effect, when you talk about the English meaning of this word appraisal, the word appraisal is synonymous with assessment, evaluation, judgment, review, as well as consideration. So if you are considering to provide a particular loan amount to the customer, it should have certain basis. Okay. Credit appraisal is the process by which the lender assesses the credit worthiness of the borrower. So borrower might be an individual, might be a business entity, might be partners. All these things have different loan products, and for every loan product we have different kind of appraisal going on. But what are the common grounds in the entire credit profile or the advances portfolio? This chapter will look into that. So when we talk about the simple definition of credit appraisal, its essence is it measures the risk inherent in the proposal, comes to a judgment to sanction or reject. This is the keyword which the bankers must have in their mind while accepting a particular loan proposal. One customer who has already walked in, as we are discussing the same example, the loan documents are there with him or her, and they are very keen to have a particular amount in their account by the end of the day. There can be 2 situations. One, that particular customer is insisting more. Reason number 1, they actually require the money and they actually possess the documents whichever is being required by the bank. Second, although the funds requirement is there, but be very careful whether all the documents which has been produced by the customer are in original or not. Do not just rush into fulfilling the commitments which you have made to the head office in the name of targets. So whether you should accept or reject a particular loan proposal, it is an outcome of what kind of appraisal you have done based on the assessment of information, the applicant as well as the project. So normally when we talk about the applicant, it is the customer, and the project refers to a particular purpose for which the customer is in need of loan amount. Changes in 2 dimensions. When we talk about the appraisal, there are 2 dimensions to it. Appraising the risk inherent in the proposal, and if the proposal will be acceptable given the risk appetite of the lender. So when we talk about certain banks, they do not offer a loan below a certain amount. Supposingly there are banks in the market. You will find the major commercial banks, scheduled commercial banks. They do not offer personal loan below 2 lakh or 2.5 lakh. That is the limit. What is the reason? Because A, it is not profitable at all. The rate of interest they will be earning on such a small amount will be less as compared to the expenses. And secondly, they doubt the credit worthiness of that customer. That if a particular customer is here in front of the bank, wants to have rupees 2 lakh, rupees 1 lakh in their accounts via loan, then how he or she will be paying it back? So repayment capacity is in doubt for such type of customers. Second, the appraisal or measurement of the quality of the credit. Quality of the credit, again, based on the documentation, whether the particular banker is fully satisfied or not, the quality of those, you can say, assets which are at stake of the bank, whether it will be returning back to the bank or not. Next, when we talk about the techniques, there are various techniques via which you can accept or for that matter reject a proposal. Credit appraisal process involves the following steps: borrower identification as well as verification, normally done via KYC. So step 1, all of you who are in the banks holding the advances profile, working in the advances section of a particular branch, you must be knowing that whenever a customer walks in, you ask for KYC, find the Aadhaar card, PAN card from the customer, and then you tend to judge that particular customer's credit worthiness via entering the details in your CIC portal. So the CIC, be it the TransUnion, CIBIL or Equifax, whatever you are using at your branch, it will tell you that what exactly is the credit history of the customer. Assessing the business of the borrower. If the borrower is here for a business loan, then you will assess what kind of capacity that particular business holds, whether the stocks are fully operational, whether those stocks are lying there for time immemorial. Let's say for 5 years the stocks are lying there, no demand is there in the market for that particular product, and the business activity is not going on very smoothly. All these things you must be assessing. Understanding the credit requirement. So especially the credit requirement is a task in front of a banker whenever we have business loans. For personal loans, you know the requirement. House loan, you know that yes, the particular customer is here to construct a home, to buy a house for you can say renovation also. But when it comes to the business loans, you are not very certain that what exactly the credit requirement should be for a particular individual who is running a business. So it will depend upon the working capital requirement. It will depend upon various, you can say, previous loans which it has already, the customer or the business entity has already taken. What about the repayment schedule of those loans? Whether the working capital is more than enough to cover up any losses, like that. All these things you should take care. Then we have one due diligence report, that if a particular customer is at risk of defaulting, how quickly he or she will default. A particular history, the credit history provided by the CIC, respective CIC, will tell you that. Selecting the appropriate exposure or the scheme. So when we talk about the customers, all they know, mostly the customers, they are aware about the loan amount. They want a particular amount to be reflected in their account, but they are not aware of the fact that which type of loan product will suit them best. And for that, the customer should be guided. The awareness must be created by the bank. And when you talk about the appropriate exposure or the scheme, it can be what? Term loan, or for that matter, overdraft. In some cases, it can be CC limit also, which you must apprise while providing that limit. Not only for the loan amount also. When we talk about the KCC, we have what? It is also a CC limit, na? Kisan credit card. So that particular limit, or for that matter, the earlier loans which used to be for tractor, ATL loans, like finalizing the terms and conditions based on the documents which are required. And once the documents are being fulfilled at the customer's end, you check with your lawyer also, with the bank's empaneled advocate. The valuation report must be there if a particular type of loan like home loan is there, or for that matter the tehsil office should be contacted if we are talking about KCC. All these things must be there in your mind while appraising a loan. When I talk about the validation of proposal, so you have taken the documents, you have sufficed whatever is required at banks and to be done, and the customer is also willing to enter into the contract with the bank. Now what? You must validate the proposal. Information provided by the applicant is verified with the supporting documents. Another important modality is field verification, which normally involves what? Pre-sanction, fine, pre-sanction inspection. For personal loans, mostly the employer will be contacted, and when we talk about the business activities, for business loans, the word of mouth floating in the market will be treated as the initial piece of information for the banks. Important part of validation process is verifying all the required approvals, licenses both on record and on display at the premises. So if we talk about business loans, again, the GSTIN, whether it is there or not. What about the balance sheet, consolidated one, income tax return, whether it is there or not. All these modalities must be completed before entering into the contract with the customer. The banker must be sure that the person requesting credit has the authority to request a loan and the legal capacity to sign a loan agreement. Who can enter into a contract or the loan agreement? Who is a major, not minor. Fine. So the type of customers, that also you should be understanding. And if you have not attempted any kind of mock tests pertaining to unit number 22, I would like to highlight that in the previous video we have completed unit number 22. So there you will find the types of borrowers as well. If you have not watched that particular video, highly recommended, just go through that video and try to solve the mock tests. Next, when you talk about the credit risk, how it is defined. Credit risk basically for the bank, it is a type of risk which the bank is taking by providing the funds to the customers and not keeping it with itself. As soon as it is out in the market, whether the funds will be returned to the bank or not, that particular journey from the disbursal till the final you can say reversal of the entire loan amount along with the interest, that entire journey, that entire time entails to the risk which has been taken by the bank. The credit risk is defined as possibility of borrower or counterparty to default. If we talk about that the entire amount plus the rate of interest which has been levied by the banks, it is returned by the customer, then the credit risk is nil. Otherwise, even if for a particular small amount, the credit is at risk. A default event can be triggered by external, internal, or combination of both external as well as internal factors. External factor happened during COVID era. Nobody was able to run their businesses smoothly, so many loans got affected, be it the MSME loans or for that matter the big loans. Internal can be because of the lack of demand or the substandard products being offered by that particular business in the market, or a combination of both as well. Next, when we talk about the risk rating, although we will be having an elaborate discussion about the risk rating in our paid classes, but to summarize, to give you an overview, in this method the credit risk is assessed in the form of rating by assigning the marks to different parameters, evaluating on the basis of threshold, preset, standards, or marks. So asset quality, asset usage, and along with that the assets accessibility, these three clubbed together will give you a particular rating about the credit risk which has been undertaken by the bank. The credit risk rating model assigns grades or marks to the known risk components. Whatever risk is there, certain weightage will be assigned to that, and finally the risk ratings will be available at your disposal. What is the criteria for decision? How the credit rating of the applicant is helpful while deciding whether we should sanction a loan or not. So credit rating score of the applicant is a primary criteria for the decision making. The credit history of the applicant. Check if the purpose of the loan fits with the credit policy of the bank and the proposed activity of the borrower is not banned or restricted list of the lending bank. So when we talk about the restriction, unlawful activities, obviously the banks cannot sanction loans for that. The activities defined by the RBI and which are being imposed on all the REs, that is the regulated entities under RBI, fine, such kind of things unacceptable. The lender will also need to check if the sanction of loan will breach any of the concentration limits or not. The salary of a person is 30,000 and he or she is already having loan of worth rupees 3 lakh and you are giving additional 9 lakh. How can it be possible? The basics. When you talk about the aspects of appraisal, first of all, creditworthiness of the borrower via CIBIL. CERSAI comes into play if there is a security interest plus land or immovable properties involved. Registrar will be there. The ROC, registrar of companies, will be one of the party in case of the business loans for companies. RBI defaulters list must be there in your evaluation criteria. CRISIL, not CRISIL, CRILC. Then we have income as well as net worth. So all those registries also in which you have to enter the defaulters list, that particular registry should also be checked by the bank. And when we talk about these registry and all, when you right now when you talk about 2025, the banking software is so advanced that once you enter the PAN and the Aadhaar, it will already being mapped by these registries. So you need not to separately check. Considering the purpose of the loan, working capital, for the purpose of working capital they require a loan, term loan, or for that matter P segment. Verifying the cash flows, source of repayment, income source, what about the income from the operations, the business operations per se. Assessing the security or the collateral security, what is the exit option in front of the particular bank. If they think that in long term this account will be a bad asset and the customer will default, how they will be recovering the money, what about the exit option, all these things must be taken care while doing the appraisal. Okay, so methods of assessment and along with that the elaborate discussion for working capital, capital expenditure, loans for individual housing, vehicle, consumer durables, all these and much more.
The 247 today in the target series we will be discussing the PPB subject. PPB, as you know, the most bulky one when it comes to JAIIB. And when I talk about the specific unit we will covering today, it will be unit number 25th pertaining to the collaterals. And if you are a banker, since we know that there are various verticals in bank, if you are from the deposits, this particular lecture will serve you good because you will be learning some basics in the loan category. And if you already are working in the advances section, this will add up to your knowledge. So it's a win-win situation for both the categories. So when we talk about the security, why we are talking about security, that must be a question in your mind. Directly when I say that a loan appraisal process has been done, that is in the unit number 23 what we have read, as soon as a loan proposal arrives at your desk, you will be assessing, you will be evaluating the particular proposal via various documents. And one such important document, or you can say one important entity, will be the security. For the secured loans, you have to recover ultimately the credit which you have disbursed. So what do we mean by security? The bank finance, it is used by the borrowers for creation of some type of asset, either for the business or for the personal use. Whenever we are discussing loan amount, it might pertain to businesses or, for that matter, personal use of an individual. But what do we mean by security? It is just an asset. Fine. The asset created out of the bank finance as per the normal banking practice is invariably taken as the security. And the asset which is held by the customer, it will be termed as the security. You are creating an asset for a business. You might take a business loan. You are having a particular asset for your personal use, that will be a security for the bank. In case the loan which is being disbursed to you, it fails, you are unable to repay the loan directly, bank can avail the benefit of this security and sell it out and recover the amount. Simply stated, this is the meaning of security. Now, when we talk about the theory, besides often banks call for any other asset owned by the borrower or the third party as a collateral security as well. So, what do we mean by collateral? Basically, you might have heard about this term collateral damage, right? That a particular damage has been created, reason being that you are unable to fulfill the minutes of a contract, and because of that, what is happening, a particular security is at stake, and this security will act as a recovery for the bank. Okay. Next, when I talk about the effectiveness of securities, there are various parameters via which we can judge how effective a security is, whatever collateral you have provided to the banks. So the borrower should have good title to the security. Mainly when we talk about the land or building, or for that matter, machinery as well, plant and machinery in case of business loans, we talk about the title, that a particular patch of land must belong to the primary holder of the account, primary applicant of a particular loan account. It should be identifiable. You cannot just say that yes, a particular patch of land is there and I do not have the said documents with me, but it belongs to my name. This cannot be entertained by the bank. So document, you must have foolproof documents with you so that banks can also identify that particular security. Security should be easy and freely transferable. Now, when we talk about the major aim, why banks want the security, they want the security just to recover their amount. Fine. If they are unable to transfer the property in their name after the recovery process has been initiated, how do you think banks will be recovering this amount? So it must be easily transferable. It should not have any encumbrance or liability attached. Example, partly paid. Talk about a patch of land. Let's just stick to that example only. You can have the example of shares also, but since we are talking about land only, so let's stick to that. When I talk about a particular patch of land, if already a loan has been disbursed via this land has already been used as a collateral security for XYZ loan, it cannot be attached to another loan in most of the cases. The ownership of the asset should be absolute. It must be established via certain authority also. The particular tehsil office must acknowledge that yes, this patch of land belongs to this XYZ person. The security should be easily marketable. You should be able to sell it. It must make sense when we talk about the selling. Fine. Whenever we are trying to sell that particular land, it must make sense. The deal must make sense, and it must be a profitable business for the bank also. Assets without wide price fluctuations are preferable. The constant price is preferred here. No speculation. That is, banks do not entertain any kind of risk. Why do you think so? This is a mechanism added because see, whenever you are disbursing credit, being a credit officer, you have disbursed XYZ loan. Fine. This credit already bears the risk whether this amount, whatever you have disbursed via credit, it will come back to the banking system or not. Additionally, if you are taking a security, a collateral, which is more riskier, then you are just adding the risk involved in that particular loan. The market value should be easily ascertainable. So you should be able to evaluate that what is the actual value of that land. So the valuation report in case of housing loan, it will act as one of the benchmark for the bankers. Plus you can consult some alternate architect also who will prepare the valuation report for you, and you should be certain that yes, this particular patch of land has a marketable value like this. It should be possible to store the security in secured manner in case of pledge particularly. So when we talk about the storage of security, whenever the documents are at stake, it must be in a storable form. Fine. Storage must be there with the bank also, and the form be in a manner of, you can say, paper only. Fine. Paper only, no photocopy, nothing. The original will be considered. Many times you might have seen that the title deed of a particular land, of patch of land, is not entertained by the banks, laminated. Fine, because it is hard to evaluate, hard to know what type of paper it is, whether it is the original one or just a photocopy. The security should be durable for a reasonable period of time. So when we talk about the expiry of certain pledges, or for that matter certain documents, that should be a certain and must be in line with the tenure of the loan. So I hope that the effectiveness of securities, you are able to know that what all points are there and how as a banker you will be evaluating the same. Now, when I talk about the types of securities, these are four. First of all, immovable assets, all those assets which you cannot move. Then we have movable assets, actionable claim, or the financial assets, the specifically shares, fine, the shares which you are keeping as a security. Lastly, we have intangible assets, those assets which we cannot directly touch or feel. These are just the basic English meaning. Let's see one by one what exactly it pertains to. So, in case of land and building, when we talk about the most common security which we normally take in the branches as collateral, this type of security is not of self-liquidating nature. That is, since it is held for long term in the same form, it does not get converted into cash during the economic cycle. So when we talk about land and building, how you will be defining it? Obviously, it is an immovable asset, but the conversion into cash, whether it is possible or not in a shorter duration, answer is no, because they are held for a long term. There are various techniques of evaluating whether a particular security is beneficial for the bank or not. And for short term loan, long term loan, when we talk about liquidation, all these things evaluated. And specifically in land and building, it is taken care that the particular patch of land is having all these effectiveness into consideration. In the event of bank decides to sell the property for recovering its advance, it needs to do so through the legal process. Fine. Do remember that bank is not the owner of that particular land. So the bankers have to go through the legal route only. And that is the only mechanism available to the bank. What are the advantages of keeping land and building as the security? So the advantage is that its value generally increases with time. Generally, that's a keyword I would say, because sometimes we have seen that some patch of land, their value has decreased over a period of time. But yes, why it is preferred over other form of securities? Because of its value. The you can say future value of a particular land is expected to increase with time. What are the disadvantages? See, disadvantages are huge, and that is the reason why whenever a loan is having patch of land as its collateral, we try to evaluate each and every aspect, be it the value of the land, be it the owner details, be it the details mentioned in the tehsil office or the revenue authority as we know it, or for that matter the disputes involved or not. These are the ground realities which I am telling you. But when we talk about the bookish language, the disadvantage is valuation is at times difficult. Fine, it is difficult to ascertain the exact value. Ascertaining the title of the owner, again, the patch of land actually belongs to him or her or not. Encumbrance attached, whether a particular loan has already been taken from that particular patch of land or not, then in those cases we have the encumbrance certificates as mandatory. It is difficult to realize the security that whether this particular patch of land will be able to cover up for the risk involved in the loan. Creating a charge is costly. It involves two or three parties. First party will be the advocate, then we have the valuation report, so valuer is also involved, plus the revenue authorities as well. Difficulty on account of rent control act. So when we talk about a particular owner whose property we are taking as a collateral, they have this law backing them which is known as the rent control act, and the rent should be a particular, you can say, benchmark for the value of a particular patch of land, and this again is not a value of the uh, rent which is offered against the land. So disadvantages are huge as compared to advantages, but again, it is the most common one which is used by the bankers. Now, when we talk about the documents which are required to be called for from the mortgager, who is the mortgager? From the particular contract, that is the loan, if you are providing a mortgage, fine, so you will be the bank or the creditor, and the debtor will be the person or the business entity who is having the facility of loan thanks to the credit provided by you. So documents of title, the first document, all the material documents of title like the sale deed, gift deed, will, partition deed, conveying the title to the borrower that yes, this borrower is the actual owner of the land. Parent documents, there might be certain documents, or you can say previous documents related to this title. These are taken for the prescribed period to ascertain the flow of title. Usually banks call for parent documents for 30 years. Fine. So revenue authorities mostly they have the record, the land record with them. And when we talk about the time duration, it will be 30 years here. Next is encumbrance certificate. As we were looking here, the encumbrance certificate for the encumbrance attachment, this is taken normally for 13 years to see if any encumbrance subsists on the property or not. So 13 years is the time limit. See, IIBF will ask you questions based on the tenure. Like for the parent documents, the banks will call the parent documents for 30 years. When you talk about the encumbrance certificate, it is for the 13 years. Then we have property tax receipts. The tax receipts for property are usually an evidence that the possession of the property is of the proposed mortgager only. Fine, who is mortgaging his or her land. Okay, so again, it is the debtor. Next, the court permission. If the property offered is standing in the name of a minor, permission of the competent court to encumber the property must be taken. Whenever minor is involved, banks hesitate to provide loan against such collateral, but yes, special permissions must be taken if such type of land is considered for collateral. Search report, if immovable property belongs to a company registered under Companies Act. Always remember, if there is a company registered under the Companies Act 2013, a certificate of registration of charge, which is issued by ROC, that is Registrar of Company, is required in order to ascertain any charge substituting on the subsisting on the property. So again, search report ensures that there are no additional charges on that particular property which you are giving, which you are having as the collateral by the mortgager. Then we have the lawyer's report, obviously the TIR, as we normally call it, the title investigation report. Normally, the banks take an opinion from their paneled advocate regarding the clear, good, and marketable title of the proposed mortgager over the property. So TIR also has some cost. The advocate will levy certain cost here, and that is the reason why we say that creating a charge is a costly phenomena. Now, when I talk about the valuation of property, how it is done by utilizing the services of recognized valuers who would be either engineers or mostly they are the architects only. Making inquiries with local real estate agents, that is also one of the method via which you can estimate the property's value. But nowadays, this inquiry does not have that particular say as compared to the valuation report, because we need concrete evidence that yes, valuation of the property is true, or you can say it is the actual or exact value, and based on this value only you will be providing the loan, so you cannot take risk here. By using the valuation published by the local authorities, this is the most authentic one. Fine, this is the most authentic one when we talk about all the services. Using latest sale transaction of the neighboring properties in order to yourself with an estimate. It will be helpful to have an estimate if you know what was the price of the neighboring properties. Calculations based on the annual rental value. But again, in this annual rental value, your Rent Control Act will be one of the controlling, you can say, enactment, and you won't be able to, gauge the actual number, actual amount of the property's value. Fine. Now, next we talk about the nature of ownership. You must ascertain that whether the property is freehold or leasehold. Freehold means you own the property, the land it's on, as well as the space above the property. It is not that just the land belongs to you, above that the building is somebody's else. And when we talk about the revenue authorities, they do not know about it, nothing like that. Freehold means land, the construction above it, and the space, everything belongs to you. Leasehold, you own the property but not the land or the building. One thing or the other, somewhere you will be missing the ownership. So freehold land owner is the absolute title holder of the land and is able to deal with it as he likes, whatever he likes, because this freehold land gives him or her the free will. Okay, free will to do whatever he or she wants to do. Leasehold is the one which is taken on the lease for a specific time period. You do not own the land per se, but the building is on lease. Like that, you can remember. So freehold tenure is forever. Leasehold, the tenure is 99 years normally. What are the other aspects which are involved when we talk about the immovable properties? If any advance is granted against the primary security of immovable property, the purpose for which such advances is sanctioned is to be made very, very clear. So the purpose is very important. You should not this particular aspect for granted, because if you do not know exactly what is the purpose, then there is again an inherent risk involved in lending. The mortgage deed must be drafted carefully considering all the legal stipulations. So legal stipulations pertains to what? Your start title, and you must know whether there are any disputes involved or not for this particular property. It must be witnessed by at least two persons. So two persons must be the witness. Simple mortgage attracts ad valorem stamp duty, whatever is applicable. Fine. This is just another form of saying that the applicable stamp duty, which is finalized by the district authorities. To avoid loss of security by fire or natural calamity, it is prudent to insure the buildings, if any, in the property for its full value at the borrower's expense. So insurance for the buildings will be done by the borrower, not you. Okay, that is why you might have seen that in home loan, or for that matter plant and machinery loans, in the branches, once the audit arrives, we tend to deduct these charges, because insurance will be provided, it must be provided in some cases, and the expenses will be borne out by the customer. I hope that most of you must be knowing, being a banker, that documentation starts from the scratch. Okay, you cannot just say that once the loan has been disbursed, now let's procure the documents, or for that matter, once the account has been opened, now let's see your Aadhaar card. No, that's not how the things will work in a bank. And whatever documents are there, especially for the credit facilities which are being offered by the banks, we will be studying them in the unit number 27. But before that, there are certain enactments, certain regulations which a particular banker must know while processing the documentation for the bank loan, or for that matter other activities. So when I talk about the Indian Contract Act, then we have the Partnership Act, Companies Act, the Indian Registration Act, Limitation Act, and the Indian Stamps Act. They directly affect the documentation process. How? Let's say, for example, in a particular partnership firm, you have procured a document of partnership deed. Okay. Only partnership deed is there with you, nothing else. Now, what is the prescribed format of this partnership deed, which is mentioned in the Partnership Act? If the partnership deed which you have procured is not in the prescribed format, it is of no use for the bank. Okay. And the format will be given where? In the Partnership Act, in the annexures of these act. Similarly, for a company governed by Companies Act 2013, if the memorandum of association does not have some stipulations as prescribed by the Companies Act, and this MOA has been admitted by a banker, then again it will be of no use. So I hope that you are understanding why these enactments you must study as a banker if you manage such type of activities pertaining to loans, credit facilities, fund and non-fund based facilities, whatever you are being assigned by the bank. What is the need for the documents? Question might arise that we need not to have the entire documents, whatever has been mentioned in the document list by the bank's board policy. But when we study deeply, when we come to know that there are various documents pertaining to a particular type of loan, we would realize the fact, and we would appreciate that these documents not only serve as the legitimate, as a legit documents as we know them, for the customer, but also they will save us, save our reputation as a banker if in case the entire loan turns into bad asset. So we can directly jump onto the recovery process if documentation is in the proper format. Okay, so first of all, it is to identify the borrower, definitely for the KYC, know your customer obligation. Then identify the security, whatever security is being involved. Supposingly a particular KCC limit has been sanctioned from your bank, but the security or the hypothecation is not properly done. Hypothecation of crops, fine, in case of KCC, is not properly done. And just in case this account becomes NPA, fine. If it becomes NPA, what about recovery process if the hypothecation of the crops is not in the prescribed format, or for that matter it has not been fully realized by the bank? Okay, so there lies the importance of the security. You need to pinpoint, identify the security in and out, not only the land, the address of the land, no, but the value of the land, but also the ownership of that particular land. All those khasra numbers must be there. For the KCC loan account, I'm telling you, the khasra numbers must be there, khatoni number must be there, because earlier when we talk about the farm land, it is not as formal. The dimensions of a farmland is not as formal as it is in the urban area. So all those stipulations which are being mentioned by the Tehsil office and acknowledged by the Patwari must be there in the KCC. Fine. So you must identify the security in and out. Then to have a written evidence of the transactions of lending made by the bank, whatever lendings you have made, you must have it documented to ensure due repayment of the loan by the borrower or the guarantor. So the repayment schedule must be in line with the requirement of the desired loan. To entitle the bank to take legal steps for recovery of the loan in the event of non-payment by the borrower or the guarantor. Fine. Recovery again, being a person from advances section, most of you would appreciate this fact that without proper loan documents, recovery process cannot be fulfilled or completed at all. Then to create a valid and effective security in favor of the bank and to create charge on this security. So how the charge is created, what do we mean by this SI charge? We will be discussing in the documentation chapter only. And if you are new to our channel, you can subscribe to it. That is JAIIB CAIIB English medium, and for bilingual medium, you can subscribe the channel. That is Officers Adda 247. Fine. This is the channel's name. So when we talk about the types of documents, mostly you have the promissory notes, a kind of negotiable instrument, fine, that you promise. A journal agreement is being signed between the creditor as well as the debtor. Next can be bill of exchange in the process of documentation. And where have we read this bill of exchange? Quickly tell me in the comment section whether we have read in PPB or not. In PPB, which module, if you remember, what are the types of bills, how they are being exchanged. Fine. Next, we have the agreements. Now, this does not only mean the loan agreement or the letter of arrangement. No, not only that, but various agreements which has been accomplished by the borrower. Right? The borrower might be having some kind of agreements with other third parties as well. So that must also be disclosed in front of the present creditor. Then we have the forms. What kind of forms? These are prescribed by the banks. Fine. These forms are not being procured by the customer or for the matter the debtor, but whatever is being prescribed by the bank, it will be included in the bank branch only. So from the bank, you can procure this particular form, XYZ form for a particular loan, and then you can approach that particular branch with all the necessary documents. Mostly these forms are for your annual income declaration, right? Annual income declaration. Fine. So now let's see what is the DPN, that is demand promissory note. See, whenever we talk about the P notes or the promissory notes, one thing is common, that a journal agreement is to be accomplished. Fine. A journal agreement is to be accomplished using the promissory notes. So where a fixed period for the repayment of loan is not specified, the bankers take a demand promissory note. Just a journal agreement, nothing specific is there. In DPN, the borrower makes a promise to the banker to repay the loan amount on demand with agreed rate of interest. Okay. And being a banker, what do you think whether this type of loan document should be procured by you or not, or some other alternate measure must be taken? The form of DPN should be in conformity with Section 4 of the NI Act, Negotiable Instrument Act 1881. Right? So the particular forms, whatever the forms are there, supposedly for DPN, they must be in line with whatever has been mentioned in Section 4 of NI Act 1881. Now, direct question can be asked from here, right? Not on the NI Act, but the specific section. So for the DPN, always remember section 4 of NI Act prescribes a particular format. DPN attracts a stamp duty as per the Indian Stamps Act. Rate of stamp is uniform throughout India. Fine. So while arranging the stamp duty which will be levied is universal across our country. It must be ensured that DPN is duly filled in and stamped before the borrower signs it. So you must fill it in full. Being a banker, you must know what to fill and where. Next, we talk about the agreements which form under the Indian Contract Act. So the form of an agreement should be in conformity with the Indian Contract Act, like for DPN it was Negotiable Instrument Act. The amount of loan, rate of interest, penal interest rate, then percentage of margin, period of repayment, right of the bankers in case of default of loan, details of the securities charged, they are included in the agreement. Always remember, the agreement has all these things. Even if the penal interest rate is not being finalized for a particular product in your bank's board policy, you will find a reference that yes, for that time period till the penal interest is not formalized for a particular digital product, or for that matter a particular product or service which are being provided at the bank's end, you will have a tentative schedule. Fine. So that tentative penal schedule should be levied once the agreement is signed. The agreements attract a stamp duty as per the Indian Stamp Act also. So Indian Stamp Act, again, it is here also. So stamp is a very important aspect of documentation. And if you want to cover the entire unit, that is unit number 27 with us, and talk about the in and out of your documentation chapter, I would highly recommend you to subscribe our channel. Fine, subscribe our channel. That is, take the paid classes, because there we are covering these topics in detail. Right now on YouTube, you will find the introduction of various chapters. But when I talk about paid classes, you will find the online live lectures in real time. You can ask your doubts as well. Plus, along with that, the coverage of the entire syllabus is exhaustive. So if you are interested to cover the entire unit, do join our paid classes. The rate of stamp duty on the agreements, it varies from state to state. So for the stamp duty on agreements, there is a variation across state. But when I talk about the DPN, the rate of stamp duty on promissory note, it is uniform throughout India. So this is a point of difference which you must keep in your mind. The bankers use different form of agreement depending on the nature of credit facility or the lending arrangement. So you will find good number of agreements for various products. Then we have forms. They are not in the nature of promise or agreement. These are obtained to specify clearly the intention of the borrower. Fine. What is your intention? You must know the intention of your customer. You must ask them directly via these forms. Example, when a payment is to be made out of the loan proceeds to a supplier of goods, a letter from the borrower authorizing the bank to pay the proceeds by means of draft or banker check is taken by means of a form. So for the payments, whatever the proceeds are being provided to the third party by this customer, reason must be specified, and this reason will be specified under the forms. Fine. So forms, they form a very integral part of the entire loan arrangement, and in the documentation also they play an immense role. Next, what is the documentation procedure? So when I talk about the procedure, you will be having a particular list first of all. So selection of correct set of documents, that is the first thing. The list which most of the bankers have for the advances section, as well as for the account opening application as well. Then stamping of the documents acknowledging the authenticity of the documents, then amount of the stamp duties, then filling of all these forms, whatever the documents are there, executing the documents, fine, providing the actual information, whatever is written in the form. Then we have some legal procedures. Legal procedures are also involved. Keeping documents valid, fine. The documents are valid, that is, they are non-expired, fine. The expiry date is not there, they are still valid, they are not void. Okay, whosoever is the owner of, let's suppose, xyz land, that particular owner is the present owner, not the past, not the future, but actual, in actual real time, that is the owner. Safekeeping and preservation of the documents, a particular process which banks find difficult at times thanks to the limited resources. But yes, the most important point. This is the most important point, because even if you tick all the boxes starting from executing the documents till the legal procedures which are involved for a particular document, if you cannot preserve or keep them in a safe, it is of no use, fine. If there is a loss of document, liability lies on the bank. Now let's see the selection of correct set of documents. It should be ensured that correct set of documents is there. When we talk about a particular facility, supposingly term loan is there, then the documents which are required for a term loan must be procured. For a working capital, the list of inventory must be there. Whatever the material is in process, or for that matter, the raw material, the finished goods, everything must be written for a working capital loan. For demand loan, various DL documents must be attached. Okay, so for a particular facility, the specific documents must be carried out. The mode of charge, you must be having hypothecation or the mortgage deed. When I talk about hypothecation, so it is like a collateral over collateral, fine, like the primary collateral. So you are trying to manage the loan using a collateral over the primary security, that is the hypothecation. Mortgage deed, that yes, this particular type of land belongs to xyz person, and the chain of record will tell us the ownership status, that first the owner was this, then so on. Next, we have the type of borrowers who are using or who are under this set of, you can say, loan. So it can be individual or company. Okay. Next, we have the stamping of documents. Now, this stamping is very important. When I talk about the stamping, it not only means that yes, you are providing a stamp, but an acknowledgement. Let's see. With the examples, you will come to know in a better way. A document shall be stamped in accordance with the Indian Stamp Act amended by the concerned state governments. Fine. So always remember, the Indian Stamp Act will be amended by various states according to their rules. Indian Stamp Act 1888 contains provisions regarding instruments chargeable with duty, mode of using the stamps, time of stamping instruments for instruments executed in India and out of India as well. Now, as per the section 17 of the Act, all the instruments chargeable with duty and executed by any person in India shall be stamped before or at the time of execution, not after. Always remember, stamping of the documents cannot happen afterwards. Although sometimes during audit, you might find these practices that yes, stamping is done at a later stage, but that too for a limited set of, you can say, loans, not for all. For those loans where the property is involved, it cannot be done. As per section 18 of the Act, every instrument other than the bill of exchange and promissory note, which are chargeable with duty and executed out of India, may be stamped within 3 months after it has been first received in India. So for that particular case, except for your bill of exchange and promissory note from foreign, if you have procured it then 3 months. 3 months is the maximum timeline. As per the section 19 of the Act, the first holder in India of any bill of exchange payable otherwise than on demand or promissory note drawn or made out of India shall affix thereto the proper stamp and cancel the same before he presents the same for acceptance or payment or endorses or transfers or otherwise negotiates the same in India. So whatever the promissory note or demand loan is there, or for that matter, bill of exchange, all these, if they are being presented by a first holder in our country itself, then the transfer of those, or for that matter, acceptance of those, will be in India only. Section 35 of this Act will provide that any person shall not admit an instrument not duly stamped in evidence for any kind of purpose. Fine.